Rishi from MCX is now with us, Head Business Development and Marketing. Rishi, thank you so much for taking out time for us. Hope all is well at MCX. Can you just talk about the surge in the volume and, with this sort of surge in prices and volumes, how is the company managing?
Well, we saw a downturn at the beginning of the lockdown, but now the volumes are back to normal and we are doing very well with the surge in the prices, especially of the bullion products. So there's a lot of interest in the gold and silver contracts, and we are very optimistic on the expansion of the commodities markets, both in terms of more products and participants.
Right. How does it generally work when prices go up? So, how the gold prices have been moving up, some of the other commodities have been moving up. Do the volumes tend to increase with the price going up? That's how it works?
So normally in any market, if you would see that, whenever there's volatility, there's good volumes. And normally, because most people are investors, then on the upside, volumes are more than when they are on the downside. Whether it's in equity markets or in commodity markets, I think the trend would be the same.
Right. So, what do you make of this move? So, in the equity markets, we are saying retail participation is increasing. So, you, of course, have a lot of corporates, a lot of people who want to hedge their position in various commodities, a lot of HNIs as well. Are you also seeing retail participation increase?
So we are seeing participation increase across the whole spectrum, whether it is corporates, hedgers, institutional participants or retail participants. We are seeing widespread increase in participation across the spectrum.
Okay, hi Mr. Nathany, this is Mubina as well joining in, and yes, absolutely, whenever there's a lot of volatility or pricing momentum being witnessed in products, there obviously is that attraction that comes by in volumes and turnover, and that's clearly witnessed. I mean, look at silver. 15,000 crores, I think, roughly is what the turnover was clocked in for the silver futures contract. So very interesting over there indeed. Now I want to talk to you about the new bullion index called the Bullex, which the MCX will be launching, I think, next week from the 24th of August. This has an underlying of gold as well as silver. So you have yet another product. Do you expect more depth, in the bullion market with the launch of this product? Do you believe that there'll be further participation now because of this product?
So, hi Mubina, thanks for that question. And yes, we do believe that with more products coming in, it will cater to different types of participants. So our existing futures contracts are all compulsory delivery based. These contracts have various advantage, the bullion futures index. So here people can basically get both the commodities in one contract, which makes it very easy. Second point is that many people don't know whether to buy gold or to buy silver, so they can basically take an exposure in a single contract. Second point is that these contracts in terms of size are very reasonable. So at present, they'll be around 8 lakh rupees in value with a lot size of 50. And if you go to buy the 1 kg contract in gold and the 30 kg contract in silver, it will cost you 50 lakhs plus 20 lakhs roughly. So that is around 70 lakhs. So a smaller exposure can be taken around 8 lakh rupees in these contracts. The third part is that these are cash settled contracts. So for people who want to hedge or take positions where they do not want to enter into delivery, where they mean, like especially retail investors, there are some type of retail investors who want to take delivery and keep it as an investment. Others may want to have a hedge or just against the gold lying with them, or just take a position which is a cash settled position. So it will cater to these people, to the jewelers who do not want to take delivery but want to hedge their jewelry. So it is ideal for people who want to hedge or invest without investing in delivery and have a cash settled product.
Yeah, and that's what essentially this product does. All right. I want to, move away from bullion and talk about crude and agri. Now, I mean, these two still have a lower proportion when it comes to, average daily turnover contribution. But firstly, of course, there was that higher margin bit, and then that logistical problem that took place back in April for your crude contract. And secondly, there was a fall, if I'm not mistaken, in your agri ADTV. But again, agri as well and soft commodities, as a space is seeing a lot of interest, a lot of traction, tea prices, coffee prices, so on and so forth. So basically agri as a whole. So how are you seeing the ADTV in agri? Are you seeing increased interest over there? And if you could touch base upon the crude volumes as well.
So the point is, Mubina, that various contracts do well in certain periods of time. Like maybe a couple of years ago, the bullion wasn't doing well and the crude was doing much better, and now bullion is doing better. So according to the trends in the market and the interest of the participants, some contracts do well and some do not. That doesn't take away from the inherent strength of these contracts, and I'm very sure that this is just a cycle, and as the cycle turns, the agri will also do well. Basically, agri contracts across the country, across exchanges, have not been doing so well. But having said that, we've had the highest turnover in like our crude palm oil contract. So it's not that agri as a whole is not doing well. There are certain pockets because of physical market issues or structural issues are not doing well at present, but I'm very sure that they'll bounce back. And regards crude, I am sure that again crude will also come back to the volumes it was doing.
Okay, all right. So the bullion indices, the bullion index rather, has been launched. I know that there was a base metal index as well that was on the cards. When can we expect a launch over there or an announcement over there?
First, we are launching the Bullion Index, which is on 24th August, the coming Monday. So through your channel, I'd just like to spread that message that we are coming out with this index. Please, everyone, please look at this index if it interests you. The base metal index will be coming sometime after this, so we do not want to land two planes at a time. Let's launch the Bullion Index, and very soon, based on the experience in the Bullion Index, we'll be launching the base metal index. The base metal index will constitute of all the 5 base metal contracts traded at MCX, which is copper, lead, zinc, aluminium, and nickel.